Bitcoin is dead is a phrase that has been uttered over and over again by those who are more skeptical of the cryptocurrency's meteoric rise. Since Bitcoin's inception, it has attracted many who are unconvinced that it has the ability to be a valuable currency or asset, and that eventually the house of cards Bitcoin investors have created will fall, leaving Bitcoin a completely worthless asset destined to never reach its previous heights. But time and time again, we see these claims get proven wrong. Even with its large swings in price, Bitcoin always ends up stronger than where it started. So why is Bitcoin so hated? What kind of claims are being made against it? And why the heck is Bitcoin so resilient despite everything? The price of Bitcoin is extremely volatile. If you keep a close eye on it, then you'll know it isn't uncommon to see massive dumps or pumps in a very short period of time. For the uninitiated, just take a look at 2011, when the price of Bitcoin went from well under $1 to over $28 and then back down to under $3, all in the span of just a year. And having a massive run up in price and then seeing it come tumbling back down to something more reasonable is a fairly common occurrence for Bitcoin. Similar scenarios played out in 2013, 2017, and 2021. This phenomenon has become known as the Bitcoin cycle, and it's heavily defined by each Bitcoin halving, which happens roughly every 10 minutes. This means in an instant, the total number of new Bitcoins being created is cut in half. This in turn makes Bitcoin a much scarcer asset and eventually ends up driving up the price. Halvings are a very big deal because they, in an instant, make each Bitcoin more scarce, as well as make Bitcoin mining less profitable, at least at that moment. As of this video, there have already been 3 halvings. One in 2012 that brought the total number of new Bitcoins per block from 50 down to 25. Then in 2016, which brought it to 12.5. Then most recently in 2020, where now only 6.25 Bitcoins are being created every 10 minutes. This event happens roughly every 4 years, so 2024, 2028, and 2032, so on, are all going to have halvings as well. Although halvings occur every 210,000 blocks, so they could happen a little earlier or later depending on how fast each block is mined, but the network attempts to keep them happening every 10 minutes by adjusting mining difficulty, so just keep in mind the exact date can move around a bit. What we've seen in the past is a massive uptrend in the months following the halving, then a steep decline immediately after the peak. Then we get a time where things are uneventful and more or less just trading sideways, and it happens all over again. These Bitcoin cycles create the perfect environment for critics to look smart. When the price of Bitcoin begins a dramatic rise and many eyes are on it, critics say that the Bitcoin bubble will pop. Then when the price of Bitcoin inevitably crashes back to earth, they say, look, I was right. Bitcoin is worthless and is going to zero. And by the time Bitcoin is coming back up to its previous highs again, years have passed and everyone has forgotten what the critics said, so they do the same thing again. So every few years you see a ton of stories about Bitcoin's new all-time highs or massive crashes, but then hear nearly nothing about it for a large stretch of time. It's way more clickbaity to say that Bitcoin is up 500% in a month, rather than saying that the low of this cycle was the high of the previous cycle from 5 years ago. But it's true, and each cycle Bitcoin comes out stronger, with a higher price, more people running the software, and more people just being aware of what it is. All extremely good things for Bitcoin. To really show just how insane the price increases of Bitcoin are in between these cycles, let's just imagine we are in 2017 for a minute. Close your eyes and really imagine it. Despacito is on the radio, the Nintendo Switch was just released, and the dumpster fire that was 2020 still seemed like the distant future. You there? Okay, now let's imagine it's early in 2017 and that you just heard of Bitcoin for the very first time. It's this new virtual currency that people are saying is going to change the world, and as you do some reading you find it costs around $1,000 for just one Bitcoin. But as you look back to last year, which is 2016, you realize that one Bitcoin was worth a lot closer to $500 then, so its value has doubled just over the last year. So without doing much more reading, you go ahead and decide to buy just one Bitcoin for $1,000. Maybe it will double to $2,000 and then you can take your money out. A few months go by and nothing super noteworthy happens. But then summer rolls around. In May, your one Bitcoin has now doubled to $2,000. But because it's doing so well, you decide to go ahead and hold on to it. Then June rolls around and it's worth $3,000. Then in July, it drops down to $2,000, but you decide to keep holding because you've still doubled your money. Then August comes around and your Bitcoin is worth over $4,000. But the fun is just getting started. In October, you're up to $6,000, but you still decide to hold because now you're hearing that it could even hit $10,000. So you're still going to hold just in case. Some people are even saying $20,000, but you're a little more skeptical of that price just because it's so high. In November, your Bitcoin is worth $7,000 and then $8,000. Then we get into December, and in just a couple of weeks, your Bitcoin is worth not $9,000, not $10,000, not even $11,000, but $19,000 US. You've just made one of the most insane trades of your entire life. A casual $1,000 has turned into almost $20,000 in less than a year. You wish you could have bought more, and heck, you even recently started throwing in a few bucks from every paycheck to try and get more Bitcoin before it gets even higher. You want to get as much as you can. After all, Bitcoin is the future of money. But then it happens. The good times are over, Bitcoin crashes. And by March of 2018, Bitcoin is back under 10K. You still did pretty good and decide that maybe Bitcoin isn't the future of money. Maybe it really is dead. And honestly, 10K seems like a lot for something like Bitcoin. It's probably way overpriced. So you sell. And you still feel pretty good. You're reading articles about how Bitcoin is dead and it was a fun experiment, but ultimately it failed. And at least you were one of the lucky ones who was able to make a decent profit off the whole thing. But just out of curiosity, you check the price now and again. 2019 rolls around and you did good. It's now under 4K for one Bitcoin. Then you forget about it. A decent amount of time passes and you hear nothing of it. You're busy with life. 2020 rolls around and things get complicated. The thought of Bitcoin never really crosses your mind anymore. Then one day in November of 2020, while scrolling through your phone, you see an article. Bitcoin price hits all-time high of almost $20,000. It all comes flooding back. You had owned one Bitcoin just a couple of years ago, and actually, you'd been buying more and could have been buying more very cheap these last 2 years, but you didn't because of the crash. You decide not to buy in. $20,000 is probably around as high as it will get. After all, it only got to that price for just a moment a couple of years back, but you couldn't be more wrong. And by April of 2021, the price of Bitcoin is over $60,000, and it gets to almost $70,000 by November. But then it begins to fall, drops to $50,000, $40,000, then $30,000. And articles everywhere saying that Bitcoin is dead, it's a failed experiment, and it will never recover. Then in September of 2022, it has dropped all the way down to $20,000. There's ultimate fear in the market, and many who were investing in Bitcoin at its highs are now gone. $20,000 for one Bitcoin is really cheap, you tell yourself. I'm gonna go ahead and put a few thousand in. So you do. The price that you once thought was a best case scenario outcome for Bitcoin is now the price you feel extremely lucky to be able to buy it at. That's the difference between just one cycle. Now that you understand how much Bitcoin's price can rise during these cycles, let's take a look at some of the claims made against Bitcoin over the years, and there have been a lot. There's a site that has archived many of these claims and is still doing so to this day. And as you can see, they have a ton of articles archived from Bitcoin skeptics. But these aren't your everyday skeptics like randoms on Twitter who just shout that Bitcoin is dead because they can. These are at least somewhat notable people who have real claims to back up what they say. So let's take a look at a few of these articles and get a better look at what exactly they are claiming. Before we get into some of the more serious claims, I want to take a look at a claim that is by far the oldest on the list. In October of 2010, well before Bitcoin was getting much mainstream attention, an article was written by the underground economist that treated Bitcoin with a lot of skepticism, but also a lot of curiosity. I'm going to read that article in its entirety now because I think it's a really interesting part of Bitcoin's early history. Oh, and before each article, I want to look at how much $1,000 worth of Bitcoin bought on the date it was originally published would be worth today. So for our first article written on October 15th, 2010, $1,000 worth of Bitcoin purchased on that date would be a measly $192 million. Okay, let's read the article now. I wasn't going to make a post bashing Bitcoin because their FAQ clearly states that its value only stems from the fact that merchants are willing to accept it. Unfortunately, this hasn't stopped people from pushing it as the currency of the future, so regretfully, I feel compelled to post why this is not so. While Bitcoin has managed to bootstrap itself on a limited scale, it lacks any mechanism for dealing with fluctuations in demand. Increasing demand for Bitcoin will cause prices in terms of Bitcoin to drop, deflation, while decreasing demand will cause them to rise, inflation. What happens in each of these cases? Let's start with deflation, because right now demand for Bitcoin is on the rise. What do people do when they think something's value will be higher tomorrow than it is today? Well, they acquire and hold on to it. Who wants to give up money that's constantly rising in value? In other words, rising demand causes demand to rise farther, irrational exuberance at its finest. Deflation begets deflation ad infinitum, or at least until something breaks. You could make a lot of money on Bitcoin provided that you get out of the market at the right time. Eventually, of course, prices won't be able to fall any farther. Either people won't be spending their Bitcoin anyway because they're making so much money just by holding it, or the merchants will get tired of changing their prices every few seconds, assuming that they don't hit technical issues first, like the indivisibility of coins or their software not being able to handle all the zeros after decimal points. At this point, or shortly before, people will start taking their profits. They'll start spending or selling their hoarded coins. If this manages to start any inflationary momentum at all, you'll see the deflation scenario played out in reverse. And who's going to stop it? The supply of Bitcoin is fixed and there is no other use for it besides as a currency. I doubt prices will have much of a chance to rise since this will happen so fast. Merchants will go from taking one coin for a year to not taking Bitcoin at all, and a bunch of people will be left with worthless Bitcoin. The reason this can't happen with government currencies is that the government currencies are backed. They're backed by bullets. If demand for USD starts to fall faster than the US government would like, the US government can raise taxes without increasing spending, increasing demand and reducing supply simultaneously. There's a bunch of stuff the Fed can do, of course, and the Fed tends to act first, but its operations are harder to explain. This is obviously not a perfect mechanism, since bubbles are still blown and popped, but even this mechanism is not available with Bitcoin. Negative feedback loops like this are basically homeostasis. In nature, positive feedback loops like exist with Bitcoin are lethal. The only thing that's even kept Bitcoin alive for this long is its novelty. Either it will remain a novelty forever, or it will transition from novelty status to dead faster than you can blink. Now, take into account that all of this this was said months before the first real Bitcoin bull run would even begin. The underground economist was making some great observations that many critics after him would also make. They mentioned that Bitcoin isn't directly backed by anything, unlike USD, which is backed directly by the government. They also mentioned that Bitcoin has no mechanism to deal with price increases, meaning many are going to want to hold Bitcoin rather than just use it as a currency, something we have definitely seen happen. They also believe that these massive increases in Bitcoin's price would reach a head. Then it would crash to something that is basically worthless in a way similar to that of how it ran up. And they weren't completely wrong about that. Each cycle is essentially this, a massive euphoric run up and then a steep decline down. The only thing they didn't understand was that Bitcoin would end that scenario much stronger than it started it. They're also very wrong about the last thing that they mentioned, which is the only thing that's even kept Bitcoin alive this long is its novelty, which just wasn't true at all. But they did notice their error. Later, the underground economist came back with some updates correcting some of what they said. Update 1 reads, "Since I posted this, I've been convinced that due to its unique properties as a purely digital, scarce, easily transferred artifact, Bitcoin's exchange value is probably enough by itself to prevent deflationary spiral to zero." They then made a more annoyed update confirming that they were now officially on board with Bitcoin. Since trolls can't seem to resist posting comments on here to make themselves feel smart, if you bother to read anything on this blog besides this post, you'd see that my second post on Bitcoin, which is clearly supportive of it, was made before the second quote-unquote obituary on 99bitcoins.com, and probably long before you'd even heard of Bitcoin. If you heard of Bitcoin when I made the original post and weren't a skeptic, you're either way smarter than I am or not that smart at all. Update 3 also has an important line. "Even with the latest crash, I remain convinced that cryptocurrencies have a future." So I'm also not putting this back up as an "I told you so." I still think I was originally wrong. So the first Bitcoin skeptic that many point back to actually ended up becoming more or less bullish on the technology, which was the right view to have, at least up until when I'm making this video. The next article is from Wired and was published on November 15th, 2011. $1,000 worth of Bitcoin bought on this date would net you over $800 million today. This article is one of the most prominent and probably one of the first big articles written around Bitcoin. And if you look back at old tweets or Reddit posts, a lot of discussion surrounding Bitcoin being dead points directly to this article. This article not only criticizes Bitcoin, but it also explains the history of Bitcoin up until that point, which was necessary for a wider audience considering how niche Bitcoin was at the time. So while this article is extremely long, I'm just going to focus on the critiques of Bitcoin given at the end of it. And another funny thing to point out before jumping into this, the Wired article has actually been taken down. I'm not sure if it's out of embarrassment or irrelevance, but either way it's gone, so I'm going to be using an older archived version from the Wayback Machine. To understand this article, it's important to understand the events that preceded it. 2011 would see the first real Bitcoin bull run. This bull run was a bit different than the ones that future cycles would experience. While normally a bull run is preceded by a halving, this one happened even before the first Bitcoin halving. And I would say the run-up happened more because people were discovering Bitcoin for the first time, with media starting to report on it. It also became easier to invest in because of exchanges like Mt. Gox. Mt. Gox was one of the first major Bitcoin exchanges and was by far the most prominent exchange for the time, as it handled a majority of all Bitcoin transactions. While it was decent at making Bitcoin more accessible to the masses, it lacked in many other ways, including security. Due to a hack on the Mt. Gox exchange, a lot of people were starting to get worried about the safety of investing in Bitcoin. The hacker actually manipulated the price of Bitcoin on the Mt. Gox exchange, making it crash from close to $20 all the way down to 1 cent. Even after the price had recovered to its real market value, the damage had already been done, and Bitcoin wouldn't return to its previous all-time high of around $30 until 2013. So this Wired article is talking about Bitcoin just a few months after this massive hack, and Bitcoin's price was still trading well below its high, with it looking unlikely it would ever be anywhere near it again. A lot of the critiques of Bitcoin that this article makes are things associated with Bitcoin rather than the currency itself. Actually, they even praise Bitcoin, saying both the code and the idea of Bitcoin may have been impregnable, but then they go on to criticize other aspects of it. The first thing they bring up is Bitcoin wallets. Now remember that this is 2011, and Bitcoin wallets were much more antiquated than they are today, so there weren't any handy seed phrases to make it easy to gain access back to your wallet. They mention how difficult it can be to properly store Bitcoins and that many users go through extreme lengths to make sure that their Bitcoins are safe. Some users protected their Bitcoin by creating multiple backups, encrypting and storing them on thumb drives, on forensically scrubbing virgin computers without internet connections, in the cloud, and on printouts stored in safe deposit boxes. Then they tell a quick story related to this. Stefan Thomas had 3 copies of his wallet, yet inadvertently managed to erase 2 of them and lose his password for the third. In a stroke, he lost about 7,000 Bitcoins, at the time worth about $140,000. I spent a week trying to recover it, he says. It was pretty painful. So it's clear that they don't really like the way that Bitcoins must be stored, because it's a little more of a hassle than other types of currency, and you could potentially lose your coins forever. They then go on to tie it back in with the Mt. Gox situation, mentioning that many Bitcoin users are not fans of centralized entities like banks, but are for some reason willing to trust a small, unregulated exchange to hold their precious Bitcoins. Obviously, things were a lot different a decade ago, but a lot of these ideas still remain true. It is harder to store your Bitcoins than it would be to, say, put $100 in a bank account. That's if you want to put your coins into cold storage where they will be safest. But that process is a lot easier now with products like Ledger that allow you to easily set up a hardware wallet that only you can access. And if you want, you can can keep your coins on an exchange. Exchanges are a lot safer today than they were in 2011. It's highly unlikely that a large exchange would have their funds hacked and there'd be no chance of you getting your coins back, but there's always still a risk. And we have seen some well-established crypto services lock users from transferring their funds out, which brings us back to the question, why put your Bitcoin with a centralized authority if the whole point is that Bitcoin has no central authority? And if you are investing in Bitcoin, you should probably have some of it in a place where someone else isn't holding it for you. But just because you let someone else store some of your Bitcoin doesn't mean you are going against the idea. With Bitcoin, you have the option to have full control over your own money, something not ever possible with traditional currencies like the US dollar. To summarize this article nicely, here's a direct quote that shows exactly what they thought of Bitcoin when they wrote it. In the public's imagination, overnight the Bitcoin went from being the currency of tomorrow to a dystopian joke. With the next article, we are going to skip ahead a few years to March 23, 2014. If you purchased $1,000 in Bitcoin at the time, it would now be worth around $36,000. This article is interesting because it was written following some other notable Bitcoin-related events. First off, Mt. Gox was hacked again and had $350 million in Bitcoin stolen from them. This eventually led to the largest Bitcoin exchange being shut down. This also comes just months after the Silk Road, a large dark website that facilitated drug deals, was closed down for good. This site is notable because it was one of the most well-known uses for Bitcoin at the time. It's also why so many people initially thought that Bitcoin was just for people who wanted to buy drugs. As we dive into this article, we see that it relies heavily on the fact that there is a tug of war in the Bitcoin community. As Bitcoin became more popular, it attracts more individuals with different opinions on how it should move forward as a currency. The article states, the fact that online drug dealers, Silicon Valley VCs, the FBI, and financial oversight committees in countries all over the world are equally interested in Bitcoin is fascinating, but their interests are at odds with one another, which will quite possibly spell the end of Bitcoin. The point they are really getting at here is the fact that Bitcoin was originally this very niche idea that had a very specific audience. The first participants of the Bitcoin network mostly had a mindset of creating this currency that is untouchable by the government. Satoshi Nakamoto even created it as a response to the 2008 financial crisis, which was caused by negligence and greed from both the government and financial institutions. So in many regards, Bitcoin is a very libertarian and anti-government idea, and many early adopters would probably be okay with things like the Silk Road existing and allowing free markets to work regardless of legality. On the other hand, you have a group that wants to see some government regulation to allow Bitcoin to prosper within the legal system. They want Bitcoin to not be an anti-government tool, but more of an additional means of legally transacting. The article also states, for starters, there's this growing divide between those who want to use the currency as a libertarian weapon against governments and established financial institutions, and Silicon Valley VCs who want to make Bitcoin a legal means of exchange by normalizing it within state control. This argument of the ideology of Bitcoin being destroyed as it grows is one that may have felt more convincing at the time, but seems a lot less relevant today. In 2014, Bitcoin was transitioning from extremely niche to still niche but with a lot of eyes on it. Companies like Coinbase were popping up, adding more legitimacy to it and attracting more investors to the space, something that hadn't really happened up until that point. Today Bitcoin is widespread and for the most part has already survived the initial jump into the mainstream. Just because the profit made on Bitcoin can be taxed or other regulations are put in place doesn't mean it can't be used to achieve its original goals. Due to Bitcoin's decentralized nature, the government can't change it, at least from a fundamental standpoint. The most they could do is completely outlaw it from being used, like they have done in China about 1 million times. But regardless of what the government does, they can never print more or make the network give them a large portion of all coins. Bitcoin cannot be controlled directly. That's because it's a worldwide network. If one country makes it illegal, there will still be other places where it is legal. There will always be people securing the network through mining, either by moving to places where it is legal or doing it illegally. So the quote-unquote death of Bitcoin through government control is not going to happen. Could a government stifle innovation by banning it or putting too much regulation on it? Of course. But it will continue regardless, both literally and ideologically. The next article we are going to take a look at is from April 24th, 2018, where Bill Harris, the founding CEO of PayPal, said that Bitcoin is the greatest scam in history. If you would have bought $1,000 of Bitcoin at the time, it would be worth over $2,000 at the time this video was recorded. This article was written just a few months after Bitcoin's December 2017 all-time high of nearly $20,000. In those few months, its price had declined by well over 50%, and Bitcoin wouldn't see its price reach the previous all-time highs for several years. Bill Harris really tears into Bitcoin with this article, and a lot of his criticisms of Bitcoin are exactly the kind of thing you hear people criticize today. He states that Bitcoin is a colossal pump and dump and that it relies entirely on the greater fool theory. The greater fool theory is this idea that you are buying something entirely because you know someone else will buy it from you for more. You're a fool for buying this overpriced asset, but someone else will be a greater fool and buy it from you for more. He also goes on to mention how Bitcoin isn't useful as a means of payment and that it isn't a good store of value. Basically, he's saying that Bitcoin isn't useful in any way, or at least not in any way that another currency doesn't do better.
Bitcoin is, where does the value come from? Well, if it's not an effective means of payment, if it's not a great store of value, and I don't think it is either one of those things, because in at very least the volatility, Well, then what makes it valuable? People say scarcity. There's no more than 21 million Bitcoin that will ever be minted. Fine. My autograph is scarce. I can promise that I will never autograph a piece of paper more than 21 million times. But it doesn't make it valuable.
It seems like Bill Harris had little understanding of how the Bitcoin network actually works. He claims that it isn't valuable due to scarcity, which is 100% true. It's pretty basic economics that scarcity doesn't provide value, but scarcity can make an already valuable asset even more valuable. While he does touch on the fact that blockchain technology is useful and innovative, he goes on to say that Bitcoin itself does not need to exist. The entire time he ignores the fact that the whole point of blockchain technology in the Bitcoin network is to provide a way for it to be transparent and trustless, so decentralized. Any other already existing currency like the dollar or euro would not adopt these same principles when creating a blockchain-based version. The whole point of Bitcoin is that there is no central authority, and that the currency can't be directly manipulated. But he never really even discusses Bitcoin's decentralization, either because he doesn't understand it or doesn't care. Both show that he likely has a minimal understanding of the technology. He then goes on to discuss how Bitcoin's only real use case is for criminals. Cryptocurrency is best suited for one use: criminal activity. Because transactions can be anonymous, law enforcement cannot easily trace who buys and sells. Its use is dominated by illegal endeavors. This argument is probably even a bit antiquated for the time. He even brings up the Silk Road, which has been shut down for nearly 4 years before this article or interview. But saying Bitcoin is only really useful for criminals is a fairly ignorant stance. It is true that criminals have and still do use it as a payment method. Sites like the Silk Road did use it for their illegal activities due to its decentralized nature. But as time has gone on, many regular normal people are using it for normal and regular purchases. He also brings up the point that Bitcoin is anonymous. It is not. It's actually pseudonymous, which means that you have a pseudonym while transacting on the blockchain. So if Wallet 1 had 10 Bitcoin and then sends 1 Bitcoin to Wallet 9, we can all see that activity. We may not know who owns Wallet 10 or 9, but we can see what they are doing, and this can be used to track criminal activity. On the other hand, you have dollars that, when in cash form, can easily avoid being tracked. Many criminals use dollars as a means of payment while conducting illegal activity, yet it's still a legitimate form of currency. He does go on to mention a few other concerns about Bitcoin, but the main point is that he doesn't think it's valuable or useful in any way. And I'm not just singling out Bill Harris here. I'm sure he's a really intelligent guy that's done tons of things I could only ever dream of doing. He is just a good example of how many critics view Bitcoin and the arguments that they make. This last article is from June 19th, 2022. And buying $1,000 of Bitcoin at the time would be worth around roughly the same amount since this was only a few months ago as of recording this video. The article is titled, "Sign Cryptocurrency is Dead as Bitcoin Dips to 17K. It is an article I want to use as a way to show how news sites can resort to clickbait to finish off a lot of these cycles. Because saying Bitcoin is dead at 17K is ridiculous on so many levels. The subtitle is even more ridiculous as it says, Bitcoin has pretty much lost all of its gains throughout the pandemic and hit a new horror low that will make history. So 17K is the horror low that will make history. Show that to someone in 2017 and they will be mind blown. This article is basically what you would expect, just talking about how Bitcoin has seen a steep decline in price over the last few months and that it could continue. It mentions that Bitcoin hasn't seen a price of 17K since October of 2020, and that it has wiped out all gains since then. They talk about how people have lost a lot of money and some crypto companies are filing for bankruptcy. Pretty standard stuff, but it does demonstrate just how ridiculous this kind of thing is. In October of 2020, less than 2 years from when this article was published, they would have written the exact opposite article about how Bitcoin was at 17K for the first time in a couple of years, and that it could be a sign that Bitcoin is going to some ridiculously high price. It's just media companies looking for clicks. So when things look bad and people feel bad, they write something bad. And articles like this have been popping up everywhere with little to no real information besides saying Bitcoin or crypto is dead. And as people read it, it just spreads and fuels the idea more. Bitcoin cycles are exactly that, a cycle. There are always going to be people capitalizing on the rise and fall of Bitcoin through each one, but that doesn't mean that every cycle is exactly the same. Actually, they are fairly different. The biggest difference is that earlier cycles were way more volatile. Back in the day, people were putting in $100 and making millions, but that isn't happening anymore. Bitcoin's market cap is so high now that 1000% upswings just aren't going to happen in a short period of time. Bitcoin is a massive asset that has a large amount of capital invested in it. Even when it's at a low, it's still worth hundreds of billions of dollars, opposed to back in the day, when people wondered if the market cap would ever even reach 1 billion. However, it does have a lot of room to grow, to become as large as something like gold, but it's still huge, so it'll take that much more demand to really move up its price. The Bitcoin cycles are also getting noticeably longer. We are continuously seeing it take longer and longer to go from the lows of the previous cycle to the highs of the next one. So it takes longer to reach new highs, and the overall gains of each cycle are becoming less insane. What does that mean for Bitcoin? Well, it could mean that it's just becoming a more stable asset overall, which is what a lot of Bitcoiners anticipate. Bitcoin could become an asset that increases at an amount of something like 5% a year on average, rather than the more insane price swings that we have today. You also have to take into account that each halving becomes less and less impactful. The number of new Bitcoins was cut down from 50 to 25, then to 12.5, then to 6.25, and so on. So going from 50 to 25 warrants a fairly big price movement, while moving from 12.5 to 6.25 is still big. It isn't nearly as impactful. And as we go on, blocks won't even award one entire Bitcoin. So going from 0.39 Bitcoin to 0.19 in 2040 isn't going to warrant as large a price movement as we see today, although it should definitely still be noticeable. It's also important to talk about how these cycles are just an idea. Yes, we see trends and a lot of it makes sense, but that doesn't mean these cycles are going to continue. But even if they do, we just mentioned how each one looks a little bit different than the last. So it's important not to treat the Bitcoin cycle as pure gospel. It's an idea we use to understand how this pattern is happening and what it could look like in the future. Despite seeing these massive 80% drops every few years, Bitcoin continues to rebound and grow stronger. This is due to many factors. Obviously, things like the halving help to make it an even scarcer asset for those who are already invested, but that's just the tip of the iceberg. With each cycle, a wave of media attention attracts new investors, who end up staying in the space after the hype is gone. They build new and interesting companies and technology in the crypto space, which attracts more attention to it, and the cycle repeats. Sometimes this technology is stuff like the crypto exchange Coinbase, which made it easy for a wide range of people to invest in Bitcoin and other cryptocurrencies. In 2021, NFTs took the spotlight, and many people became interested in things like Bitcoin after hearing about JPEGs that were worth millions of dollars. So Bitcoin is resilient because people see its worth. They join to get rich, and then when they see what Bitcoin actually is and how it functions, they decide it's worth sticking around for. Bitcoin is a new and emerging technology, and there are tons of unknowns. But as time goes on, it becomes more clear that it won't only survive, but it will thrive. New technologies always have their skeptics. Just look at the internet in the 90s, where many thought it was nothing but a passing fad. But as we all know today, there hasn't been a more influential technology. Soon the term Bitcoin is dead will seem just as ridiculous as saying, the internet is a fad. But for now, it's just a sign that we are still early.